Here we are again, folks. Another double back-to-back live stream day where we are getting into my favorite stocks in an open discussion Q&A. I wouldn't mind getting into some of the conversations I already had this morning with some folks when we're talking about things like logistics, talk a little bit about our spec plays with things like Tesla, Google. Got to get into that because there's a lot going on across the board there. Maybe some self-driving talk because there are some advancements going on. It's just been an incredible market. And I've been just having such good conversations lately with folks privately about a lot of different company stocks, real estate. And it's been fun. I've been looking up real estate deals recently and still running the math, primarily in the condo market, but condo market's not nearly as exciting. And I think it's been drawn down quite a little bit. But I'll kick it off here real quick, folks. I just want to get sure I can see the chat because for some reason YouTube is not showing me the chat. This is it may not be visible. So I might be a little frustrated if I cannot see your chat, which makes me want to grab my phone and open this live stream up so I can see what you guys are saying because I'm kind of annoyed that my YouTube live here seems to be broken. But let me pull this up real quick, guys, because obviously these live streams are what they are, and sometimes things glitch out. I swear, if I could show you the screen cap, it's literally hiding um, my conversation chat. There's 10 of you guys in here with some likes. So let me pull this open so I can see what you guys are talking about. And here we go. At least I can see the conversation now. So if you guys want to have any Q&A while we go through this, I can see it. So getting right into this, folks. Maybe we'll kick it off with some of the funner chat that furies the minds of the growth investors out there, and then we'll get into some dividend talk. But Tesla's been a relatively interesting conversation lately because the valuation metrics are still nutty, and considering we just had the big short going against it, and he's got about what 500. I don't know if it's 500 million short against Tesla. Like he's got I'm pretty sure he makes up the vast majority of the short position on Tesla right now because I think there's only like a 5% float on Tesla for shorts, which is kind of hilarious. So I mean, I feel like he's might be one of the few that are shorting it. It's funny because when you look at the numbers, right? Because I mean, when you go look at something like a GM that's doing like 100 billion plus in revenue against a Tesla right now, it's sitting at like 30 billion. It's kind of laughable, really, but I don't think people take into the full consideration that you're looking at things like the pre-reservation numbers are insane. Like I don't know if a lot of car companies have the kind of reservations that Tesla has because they have over a million Cybertruck, easily $100 billion in revenue that's just sitting there waiting to happen. I mean, you're taking a look across the board when you take a look at the Roadster, which I think has been like the worst PR stunt because it's just so far delayed, and they keep adding things to it, like one of those rocket thruster things, or I can't remember exactly what it was called to make it go from 0 to 60 and like they've made the fastest street legal car, and they continue to prove themselves again and again on the manufacturing side. This was the same thing with the new release of the Plaid, because I thought Volvo was crushing the electric motor market because they just released an electric motor that is way better, way more sufficient, way better parts involved in it than what Tesla was currently using. But then they came out with the Plaid, and they didn't say that they were going to upgrade the motor, and they did. And the Plaid has the best torque rating because usually when these electric vehicles hit about 100 miles an hour, the torque starts to drop off and you lose that ramp up. Whereas with the Plaid now it goes from like 0 to 200K or miles or whatever it's got, like with no slowdown speed at all. It's just all the way up. So I mean, it's going to be it's always a fun conversation to try and figure out what Tesla's valuation is. But it's one of these things where you either believe it's going to be a multi-trillion-dollar business in the next 5 to 10 years, or you don't. Maybe 5 years could be a stretch. I still think we got to get through this growing hurdle of getting manufacturing up to pace. Which you want to talk about manufacturing, guys. This is another thing people just severely overlook with the dinosaur relics of things like GM, which it's just funny to me because like when you look at the manufacturing behind how they build their parts, this is the big problem China's having because people are talking about stealing it's copyrighted material, right? Like, okay, let's just take Tesla's parts and replicate them or just take the best parts and replicate them. But Tesla actually has to engineer manufacturing machines to make these parts. So it's not only you just have to make the parts, you have to make the machines that make the parts. And Tesla's really advanced that automation on part manufacturing. And I'll get into some of your questions here in a sec, because a lot of you are talking about what about the drone industry. And maybe we'll segue into this because this comes into conversation with Tesla as well that I found very interesting because there's a guy that I watch named Sandy Munro. I watch a few mechanics. There's a few really big YouTube mechanics that I don't, like I said, I try not to talk out of my ass about things that I think are true. I just try and listen to people that know a hell of a lot more than I do about the industry. And Sandy Munro used to work for GM, really high up, used to work with the high-end engineers all the way through the 80s. And he's basically the guy that says this is why Tesla's winning. Like there's no real competitors to Tesla just yet in scale of manufacturing, because most of these cars are limited prints for the time being. And I think the Polestar right now is the only car I think that will directly compete with Tesla because, again, when you look at something like the Porsche or the Ford Mustang, like these are all limited print vehicles. They're not mass produced vehicles, so there's always going to be a limitation on, the future of EVs when you're only making like 20 or 50,000 of them, right? Whereas Tesla's like, we're going to make hundreds of thousands of these. So they're the first company to ramp scale, and Polestar I think is going to be the second car to ramp scale. But Sandy Munro, that talks about all this stuff that I just kind of regurgitate, he was talking about drones, and this is such a fascinating conversation to be had because a lot of people think drones are inefficient. They think they're loud, noisy, they're never going to be used for anything, and I think that is a stupid misconception of the advancement in drone technology. Sandy Munro and his team designed a plane that is 100% silent, just no noise at all, and unbelievable manufacturing and just engineering. And he talks a little bit about this, and I thought this would be interesting for something like Amazon, right? Like if you live in a suburbia, anywhere suburbia near an Amazon factory, and you can make a perfectly quiet drone that's going to fly, just high enough to be at a range of anything, or just low enough that it's not in the flight zone, which I think is something like 2,000 feet. So you'd have to be probably be below 2,000 feet. I used to be a pilot. 2,000 feet is usually the minimum you want to be at. 6 to 7 is cruising altitude for small planes, and then you get into like 20, 30,000 feet for obviously commercial jets. So you're not going to be playing anywhere in that range. But obviously, if we're in that low zone and you can get guidelines to approve it, because you can't fly planes in any area where there are airports, obviously, right? But if Amazon has a factory, say, next to a suburban area, are we trying to connect? Can you guys hear me okay? Give me a thumbs up if you guys can hear me okay. Let me make sure this is working, because for some reason it's saying that it's having issues connecting here, but I think we're okay. So I'm gonna keep this going. If there's any issues, let me know in the comments. But it seems to be going okay. I just see a little thing that says it's trying to reconnect. So you guys can hear me. We're all good. Yeah, I don't know why YouTube it's broken right now. It's not showing me my comment sections, and it's not showing me. It's saying I'm having an unstable connection. So we'll just keep going. If it's live, what do you expect? But when you're talking about drones, guys, I wouldn't be surprised if Amazon comes up with like a little QR code or something that you put in your backyard as like a landing pad, and when you order something, it sees your address, and the drone flies over with your package, and it scans the QR code, comes down and drops it on the landing pad in your backyard or something. That's the evolution I think we're eventually going to see, because they're already utilizing drones in hard to reach places. When you're talking about like Alaska, I don't know about Alaska, so that might be a stretch. Maybe Alaska. I know there's a few remote areas where they're using drones to fly in materials rather than do it manually. So drones are being implemented. I just think it's the same thing with Tesla. It's like you got to be patient with this stuff to evolve to a level where it's going to become efficient. And one day you're just going to say, hey, there's a product that I can buy that's going to allow these guys to deliver packages with drones to my house. I think that future is inevitable, because it's just sensible, it's cheaper, it's just better, right? And then you got to introduce self-driving vehicles. And speaking on the path of automation and AI, which drones are so much more sufficient. I mean, think about drone delivery for AI and automation. You just go up, there's nothing to hit. That's the reason I love flying so much. Was like when I was getting my pilot license, was like it's easier than driving a car, because there's really nothing to hit, unless you're an idiot. You got to pay attention, obviously, but you could flip a plane upside down and still get it all to recover, and you're fine. Not obviously a commercial jet, but the little planes are awesome, right? So like when you have that efficiency, it makes AI so much more easier to accomplish, because when you're talking about self-driving, whether it's with Amazon, whether you're looking at Google Waymo, or the subsidiary with the Chevy Cruise, the problem with all of these, and I don't think people understand that they're very use case specific. And I don't think people really understand the scope of the complications that come with trying to solve real world AI, especially when you're trying to do full self-driving and automation. And I can only put this into perspective for those of you that don't know. Let's say you take something like Waymo, or Google's Waymo, or even the Chevy Cruise. If you take these systems, first of all, they're not going to be mass marketed produced. They're not something that you are ever going to be able to buy. So, I mean, that's a big hindrance in the first place. But then you look at the fact that these things are only going to be used for companies like Walmart. I know Google Waymo is partnering with trucking companies right now, but what they're trying to do is they're trying to build a pathway. And you can take a look, because they've already done this with a lot of different airplane companies where they built highways in the sky. These are automated highways that have been pre-tracked and built into a machine learning algorithm. So when there's nothing to hit, and you can follow a highway with no obstacles, and like, with a 100% degree of certainty, all the obstacles around you are other planes that are super easy to avoid, just like Tesla says with electric vehicles communicating against each other. You have to keep in mind that that when you're building these things out, that you have to measure the path. So when you look at something like a Waymo that's partnering with like Walmart or no, Waymo, I think Waymo's doing some Walmart stuff. I can't remember what the exact integrations, but they've already pre-built a pathway that they can only drive on. And they can't really kind of go away from that path, because if they do, they don't have enough machine learning to figure out, oh, there's a deer, oh, now we're in the desert, guys, and here's the path in the desert we have to take. Like, that's what Tesla's trying to solve. And I don't think people appreciate the valuation that Tesla has with that, because it's all based on data. And when you look at Google and Chevy Cruise, the data is limited as hell because they just don't have the machine learning taking it all in, whereas Tesla's got millions of vehicles out there right now where people constantly triggering self-driving and then kind of taking over it, so it feeds the machine, right? So I mean, I think people underestimate the value of Tesla just because when you look at all that stuff coming into play, considering if you value Google based off the data they own, and that's how I value Google. I think Google will be a $5 or $10 trillion company. I cannot foresee it not coming true because they have all the data. We are feeding our entire lives to these machines that they can just build AI and algorithms around to solve different problems, and it's useless without the data, right? So anyways, I'll put that aside because I just think the conversation around AI in general goes so far beyond drones, self-driving. It's going to be, and I talked about this before, they're building plane parts with machine learning. They're building, soon they're going to be building buildings with 3D printers, and it's all going to be machine algorithm done because the machines are better than engineers at figuring out what's the most stable and least amount of parts used for building material. It's incredible, guys. AI is the most underlooked aspect of the world. And I think when you're looking at any kind of growth vectors in a company, you need to own all of them. There's only like 8 companies that are on the forefront of AI. You want to own all of them, because even at the valuation they trade at, I just don't think you appreciate what the next 5 to 10 years is going to look like when that comes into play at a full scale level. You're talking about your Apple, your Microsoft, your Amazon, your Facebook, your Google, your Tesla, all these companies that have all the data, all the money's in data. We know this. This is becoming very apparent when you look at things like Robinhood that makes money off your data, selling your data, Google, etc. Let's get into some comments and questions because I do want to get into some REITs and some other things. We can spread into some dividends, but let's get into some questions so I stop rambling as much. I'm hesitant to put more dollars in the market, not selling, as we can see the inflation. Yeah, this is the short-term problem, right? Like, it's kind of like there's so many red flags in the market right now, but you can't not be investing. Because I mean, I invested all the way up to March 2020 and watched my portfolio drop 30%, but now it's tripled that. So I mean, you still want to be in the market. You just want to have enough leeway that if the market crashes, you have the tools to take advantage of that crash. And for me, I'm trying to sit on about 20K in cash. I'm trying to keep my line of credit open because in March of 2020, I leveraged my line of credit into the markets. It was brilliant. I mean, when you can understand the value metrics and you're patient and you have the money to cover the interest payments for the time being, especially if you're buying dividend stocks that cover the interest anyways, you make big money real quick. I mean, I leveraged, I think 10 or 15,000 for my line of credit into RioCan. That was incredible. I ended up just paying it off because I didn't want to sell my RioCan shares though. I'm still holding that strong. Now I'm kind of stuck in a hard spot with that one because I can't sell it without cap gains, and cap gains on taxes right now for me sucks because I kind of pushed myself into a higher tax bracket. And in Canada, you get taxed. I think the highest marginal rate on capital gains is about 23 to 28%. Don't quote me on that. What else we got? So looking at dividend stocks, I just wanted to say thank you for those videos and please keep them coming. I'm going to do an entire video on Canadian dividend stocks because a lot of you seem relatively intrigued. And it's a challenging game in the dividend world because banks hit all-time highs. A lot of stocks hit all-time highs recently, which makes it relatively annoying to be cost averaging. And unless you started at the bottoms, I have a hard time buying the tops here. I kind of just put the brakes on a lot of companies I was pretty attracted to before. But when it comes to Canadian stocks, I'm still liking the REIT sector a bit. Nice to see a bit of a pullback happening right now in the markets. I'm hoping that continues. If we see a 15% correction, I will be giddy as a little kid, and I will be buying some new companies that I have on my list. What is your view on Manulife? A lot of you ask me about Manulife, another Canadian company. It's funny, every time we drive downtown, which we did yesterday through Toronto, I always see the Manulife building. And Manulife is interesting because I think it goes a little bit more beyond just insurance. It's let me look it up. I wish I could look it up conveniently. I'm going to have to close the stream down, so I'm not going to see your comments here, but let me just look it up real quick and just take a look. I'm not a fan of insurance companies in general because I just don't understand them and they scare the crap out of me because, like, when you look at Warren Buffett, who keeps such a huge cash position just in case you have destruction in weather, crazy events that lead to many people getting insurance calls. that you need to have the company has to have that capital to back it up. And a lot of insurance companies are scam artists. I mean, the Toronto government charged two companies with overselling insurance that wasn't risk calculated properly, where the insurance company was making a fortune, basically lying to people. Manulife trades for $24 a share. It's trading down about 12% from its all-time highs. You're starting a yield at 4.65%, a PE ratio that's absolutely insane at about a 9, even from the levels that it is sitting at. Pretty incredible stuff. I just want to take a look at the compounded rate of dividend growth. Because the dividend growth is usually the first thing that I'm looking at. And it looks like Manulife did their last dividend raise actually going into 2020, just during the pandemic, actually. So Manulife's done a pretty good job on that end of it. Their dividend went from 2019 at 25 cents a quarter to 28 cents. They also are probably a Canadian aristocrat. It looks like they've been raising the dividend for the last decade, which is absolutely wonderful. But from the standpoint of cash flow, that's the only thing that really matters after the dividend. If the dividend's growing, that's usually a good sign, but is it growing along with the balance sheet? If you get those two things ticked off, it's usually a pretty good buy, in my opinion. Like I said, I'm just not a typical fan of insurance. If you're buying individual stocks, and I mean, Manulife has beat every quarter for the last year, so I mean, their performance has been phenomenal. It looks like they're doing fine. I mean, I could be missing something, but I'm going to leave that to you guys to figure out. But putting that aside, let me go back into the live here so I can figure out exactly what you guys are talking about, and maybe what we'll do is we'll talk about REITs, because the real estate market's going to be in a very wonky phase for the next coming 6 to 12 months because of the interest rates that we know are going to be going up. The fact that people tried to dive into the market as quick as they could while interest rates were down. I think we're getting into a cooling period. And for the first time ever, I think across the US as well, we saw housing prices level off, and people are actually not rushing into buying them as quick as they once were, which I think is crucial as a pivotal point, considering for the last 3 to 6 months, we've seen nothing but an insane market. And if you guys watch Dave Ramsey, I find it relatively entertaining because Dave Ramsey is constantly getting phone calls of people literally just going on about why can't I see this stupid sorry guys, I'm trying to, there we go. Okay, we're back. Sorry, I couldn't see your comments. Yeah, it was funny because if you go watch Dave Ramsey, everyone and their grandmother's calling and asking, should I buy a house? I'm stuck in a situation where I'm renting and I don't know what to do. And the thing is when the market is bonanzas, like bonanzas going nutty, I would take it cautiously because you just don't want to compete in a market where you have to overpay for shit. It's honestly like the worst feeling in the world where the only house you can afford is the house you never wanted. And then you end up buying it. And then a year down the road, you don't like it any more than the day that you bought it, and you try and sell it because it's the worst house on the block and the only one you could afford. Now you can't even sell it because there's no demand in the market as there was, and people are wanting to buy better properties, right? So, I mean, I wouldn't put yourself in a trap. Houses will ruin your life if you're not careful. You got to be really careful with real estate. So when I was talking today with a friend of mine about real estate, I was really getting into the industrial sector. There's a few sectors of the market that I find incredibly appealing when it comes to real estate. And that has to be like, every time I'm driving through the city, the two things I appreciate the most is companies that are taking advantage of telecom, because telecom rents the buildings to put the telecommunication towers on top of them. That is probably one of the best real estate business models on the bloody planet. And if you want to see a company that outperforms even the telecom companies, what is it? American Towers. American Towers is largely leveraged off telecom companies and putting up telecommunication towers. And I just noticed someone threw up RioCan and Smart Centers on the watch list. Smart Centers, actually an incredible example of a company that leverages telecom. I'm still digging down into Smart Centers. It's been on my buy list for a while, but I heard some people tell me that they're kind of manipulating the books and there's actually not going to be as much growth moving forward as there's going to be with things like RioCan. And Smart Centers is insanely diversified beyond my understanding. So I've been kind of looking into it a little bit more in depthly to just try and grasp it better. Because with RioCan, I love RioCan because it's simple. It's just so easy to understand. It's so easy to see their premium properties. They're focused on the highest end real estate in the city of Toronto, and some of the outs is one that's been on my list, and it's just a matter of being patient with it until I get fully grasped on what they're doing. But if you're buying it for cash flow, probably not gonna hurt you to buy it. I mean, it's been around for a very, very long time. However, Smart Centers, I know for a fact, is involved in telecom. If you go to Smart Centers, a lot of them, you'll see the telecommunication towers on top of some of the buildings or individual telecom towers, right? So when you're looking at really high stapled industries, that is probably at the top of the list with industrials. I have fallen in love with the industrial sector. Oh my God. Industrials and logistics right now, when you look at companies like Amazon, all these companies, Tesla, BMW, all of them, FedEx, it doesn't matter what company you are shifting into a world of shipping and handling. And it's crazy that Amazon doesn't even have enough facilities to keep up with the demand. So they leverage out that demand to third-party companies like Stag Industrial, Dream Industrial. There's a bunch of them out there. I love Stag. There's a Canadian one that's, I think, 30% encored by Magna International, which builds a lot of car parts for things like all the big car companies. Stag Industrial, I want to shake the management hands. I've never seen a real estate investment trust that has been so well put together. There are some things I don't particularly enjoy when you're talking about things like the share dilution. Unfortunately, the way Stag operates is I feel like they capture some of these incredible clients like Amazon, which, by the way, their largest tenant only makes up 3% of their income portfolio, and that is Amazon. And then you have FedEx, BMW, all the major auto manufacturers, so many companies. It's incredible. So the problem I have with them, however, is they I feel like these clients come in and they say, hey, we need more room. Get us more room. You're the industrial guys. This is what you do. Go find us more warehousing. So what they do is they dilute us as shareholders. They take that capital, they go find another warehouse, they buy it, and then they already have a tenant to fill it. I think that's what they're doing, which I can't get over the growth that that company has experienced from the revenue lines for a REIT. And it just really goes to show you that it's just the underlines of society right now. And I can't get over the network of it all, because those leases, guys, even when those leases need renewal, you know with 100% degree of certainty that those tenants aren't going anywhere. It's just, if anything, it's just going to keep going up. They're just going to keep renewing and making more leases, right? So it's just, I don't know, man. I got some comments here too from Shamir with regards to industrials. Was looking to invest in railways, leaning towards CN. What's your preference, CN or CPC? I don't buy the railways because I feel like they're relatively expensive, and I'm honestly kind of concerned with the railways long term. It's weird when you buy individual stocks because sometimes you just want to diversify your portfolio with what you've been told are the best stocks ever. But sometimes at your younger age, if you plan on holding them, and I want to try and buy things like Johnson and Johnson that I can hold for the next 50 years and not have to worry about it. And though I don't think the railways are going anywhere, they're having competition that is being severely underlooked when we look at electric trucks. Um, by mile, electric trucks, tractor trailers, even right now, even though they're not fully implemented, they're still being manufactured and the kinks are getting worked out. And yeah, there's kinks. It's not perfect by any means. They know for a fact it's cheaper than railway travel. And railway travel has been the cheapest way of transporting goods for a long time, for a very long time, probably like 100 years. But we're heading into a world right now where trains aren't going to be the most. Now, however, even though they're not going to be the cheapest or most efficient way to transport goods, they do have a moat that you'll never see the transportation trucking industry ever take advantage of. That's chemicals, fertilizers, anything that is insanely toxic. They use trains. They don't want to put them on transport trucks that can have accidents. Trains way safer than tractor trailers, but again, that doesn't take into consideration a lot of the self-driving mechanisms, or if that makes it safer. But that's another moat that trains have. I just don't like the valuations they trade at, guys. The dividends start way too low for me. I just don't find it appealing at all. So I do like the industry because they do have moats and they will be around forever. And obviously, Buffett's a big fan of them, and it's just you're paying a premium for that. It's kind of like buying Pepsi. Like, so those are kind of the stocks that I would put into a basket of what I call institutional money stocks, because these are like your pension funds, the Canadian pension fund, U.S. pension funds, any of the big pension funds. These are the stocks they own. So they're usually like 10 times more stable. You're paying usually a way higher premium, and they usually just don't drop very much. And if they do, they usually get picked up pretty quick. And I mean, we saw that exactly with a lot of the consumer staple brands, Procter and Gamble, Pepsi, Johnson and Johnson. Johnson and Johnson is my favorite, though. I mean, that company is like, I keep looking at healthcare companies and I get turned off immediately because they're so hard to predict when all of their major drugs are going to run out in the next 5 to 10 years and the patents are going to become public domain. and they're screwed. And then they have to find some innovation. And I mean, we talk about this with like Pfizer and all these companies, and with the Botox and Merck and Company. There's so many of them, but they're not poised, in my opinion, as well as something like a Johnson and Johnson, which has three pivotal parts to their business, which is obviously the retail side of it. When you're talking about consumer things like Band-Aids, Tylenol, you have your medical equipment side of it for surgeries, which is going to start coming back very soon. And then, of course, you have your pharmaceutical side of it, which is going to be a little bit more volatile depending on the life expectancy of the patents on those drugs. But J&J has been done a great job through this pandemic. I mean, they've done a fabulous job, even though they've saw a major ding on their surgery equipment, because obviously surgeries have been put back. In fact, I've heard there's a backlog on surgeries in Canada up to 2 to 3 years, which blows my mind. So that we're going to see this pent up demand that's obviously coming into some of the hyperinflation we're seeing across the market, because obviously, I mean, I tried to get into the doctors for a while. It was a headache and a half. And I still need to go for x-rays myself, actually, but I can get x-rays now. I can go in at any time. I wish I got to do that soon. Just started a position at J&J recently. Glad I did. Yeah, I managed to pick it up on the dips. Honestly, what I'd recommend with these kind of pension fund stocks is I would make a list of them, and I wouldn't just throw all my money in at once. I would just be patient, maybe get a starter position in the ones you like, and then just wait for the dips, because those things are only good to buy on the dips to get any kind of real good return out of them, because their average rate of return isn't like crazy huge. Some of them are, sure, but against the market, some of them have lacklustered at best because they trade at such high premiums and their growth rate isn't actually like that stellar. They're just staples, great dividend increasers if you got a long enough time horizon. But for the very moment, I like looking at things that have much higher yields, that compound, that still have future forward-looking growth. Things like Algonquin Power. I love the utility sector by far. The utility sector is my favorite space, though it's probably going to get a ding when interest rates go up because they're highly leveraged usually. So they're usually highly affected by interest rates, depending on how long their terms are locked in. But that's a fear with those. But I still like them a lot. I picked some up after Scottish ruling in the talc lawsuit. Yeah, the talc lawsuit kicked them. They're like a mobster, man. J&J is like Pablo Escobar. It's crazy. I mean, they started the opioid crisis. Like every big company has a dark side to it. It's unfortunate, but Johnson and Johnson definitely has a dark history with some shit that was real bad. And I don't think anything was worse than the opioid epidemic. I don't think they're responsible for what we're seeing now because of China's shipping in a lot of fentanyl, which I think is terrible. I've had some friends, unfortunately, pass away from that. I know some people that were just buying some regular old green stuff. And unfortunately, the people they bought it from touched a table that had fentanyl on it, and they had to go to the hospital and they almost died. And these are people that don't do hard drugs, right? Like fentanyl is a terrifying thing. But there was a time period where, unfortunately, Johnson & Johnson, they paid a $500 million fine for causing the greatest opioid crisis in U.S. history. I mean, the amount of people they probably unfortunately died from that is insane, and that's that's the doctors' faults too, right? Like you can't just pin that on Johnson and Johnson. I mean, doctors were really incentivized to push those onto people, and I know people that got addicted just taking pain meds for broken ankles. Like they were prescribing that shit for anything. Headaches, here's some T3s, whatever. I just picked up some after. Yeah. So what else going on? Which crypto is the best to invest in right now? Crypto is interesting still. I was hoping we were going to see a bigger dip because China right now is really clamping down on the crypto market. We just saw the energy company in one of those places trying to analyze where these big energy pulls are coming from the crypto market. They're shutting them down. They don't want crypto mining going on. They're banning like financial institutions from owning Bitcoin, and I think this is great. And the reason I think it's great is it's so reminiscent of the gold being banned back in the 1930s. And I don't think they let people start buying gold till what, the 1950s or 60s, or it was or is it the 70s? I mean, gold was illegal to own for a very long period of time, which gave it an absurd valuation. And I think it only offers more validity to Bitcoin when we see these banning of just how do you ban this stuff? It's and the funny thing is I thought this would open up the graphics card market, because I'm like, oh my god, if there's tons of crypto miners with $1 million setups going to be liquidating their graphics cards, I'm going to go on eBay and buy some of this shit. I'm like, I mean, crypto mining is insanely profitable. For as far as I can tell, it gets more profitable the more Bitcoin goes up. So I'm like, heck, I'll buy some graphics card and start a little mining system. I'll pay 20 grand for some graphics cards, but that's not what's happening. They're actually just shifting all the graphics cards, and they're just tearing these systems down and then moving them over to somewhere where they can reset them up. And I mean, they're even shipping them to the US, and they're owning warehousing in the US, and they're shipping them from China to reset them up so they can do it where they're not going to run into trouble. I think it's wonderful personally, just in my own perspective here. I like owning a little bit of crypto, but I like it like gold. I don't recommend most people own a lot of it. I just don't see the the validity of it in owning like I don't understand why Andre Sheik owns like $800,000 worth of Bitcoin, and his portfolio is only like 2 or 300 grand. When it comes to that stuff, I think it gets nutty. I'm more of a diversified portfolio guy. You know, I don't want to make like $1 billion bet and then just pray to God it works out. I'd rather just have stability in my life, and I can help as many people off that as humanly possible. I mean, you got $1 million, you make 10% a year, that's 100 grand. That's crazy. And that's not even market average returns for the last 10 years. The 10-year return has been like 20%. So imagine if you had $1 million right now and the markets just keep doing what they're doing. You're making 15-20% a year. You're fine. You're just fine. Do you really need to try and turn it into $1 billion when you could leverage 10% of your portfolio and still make millions if Bitcoin really works out? I don't understand crypto. I am embarrassed to say. Don't be embarrassed. I didn't figure out crypto till a few months ago. I mean, I knew about it for a long time. I got almost caught up in scams related to it. I had a really bad vibe about it. I never really appreciated it until I used it. And that's what somebody slapped me about, because I used to be so cynical about Bitcoin and just how bad or what was it BitConnect was, and I got involved in things in Canada that were similar to BitConnect that were really sketchy. What you think about it in comparison to PayPal? I did it, and it blew my mind. It honestly blew my mind. I just couldn't get over it. It's better than any bank. It's better than any PayPal. It's better than anything I've ever used to transact currency. It's just phenomenal. It's insane because like unless you're dealing with foreign exchange, which I do on a daily basis because I accept payments from international like UK, the US, and I'm constantly converting that currency around, and it's just a headache. I mean, have you ever tried to do an international wire transfer, and the fees associated with that are just stupid. They're stupid. PayPal charges an arm and a leg, for Christ's sakes. Crypto, I can do it within 5 minutes. It takes no time at all, and I can transfer it to any currency in the world without any forex fees. It's crazy. It honestly is mind blowing when you use it for that purpose, and it's such a better. It's like Elon Musk said. He's like, it's not the best thing in the world. There are inefficiencies about it, of course. It's not instant. Sometimes there's delays, but I've never had it take longer than 10 or 15 minutes at the most. However, it's a better mousetrap, and like Kevin O'Leary says, if it's a better mousetrap, it's a better mousetrap. And when you get the Federal Reserve talking about it, and they're going to start getting involved, when you hear blockchain is going to be getting introduced with people like Robinhood who are trying to figure out how to solve the closing house problem for stocks. I mean, you just start seeing how it integrates into society in so many levels in the fintech world that it's stupid not, in my opinion, to at least own a little bit. It's like gold. I don't care about it. I don't like it. It sits there. You can rub it unless you're really utilizing it for something. Why bother? It doesn't really crap out a dividend. I don't want to leverage it to make capital. I just want to use it as a kind of an emergency fund, just in case I need to do something where the currency gets crazy or something happens. You never know. It's a good apocalyptic thing because the government can't control it. They want to, and that's the best thing ever, right? Because when the government starts waking up to this, because remember when the government said, "Hey, it's like art. It's just like art. Hey, who cares about it? You guys are dumb. If you want to buy it, go ahead." That was the government's vibe up till last year. Going to the end of last year, every single government, China, US, the Fed, Jerome Powell, they all are like, okay, this is a thing. This is a thing. Okay, we got to worry about this. This is a thing. And it's so dumb to me that people won't recognize that when Jerome Powell starts talking about it and integrating it into the USD, and they want to start using blockchain technology, but in their own integration, you're an idiot to not take a look at this shit. I mean, Mark Cuban's all about it. Kevin O'Leary's all about it. Elon Musk is all about it. And when you look at the amount of people that own Bitcoin, it's nobody. Nobody owns Bitcoin. And in real life, guys, no one owns it. The percentage of people that own it is null. It's crazy how unintegrated it truly is into society right now. And it's only worth like what, 600 billion or something like that, like Bitcoin specifically, not the whole crypto market, but we can put that aside. Because it's not the most enlightening conversation, in my opinion. I'm just not a fan of Bitcoin. I'm still not the biggest fan of it. I just can appreciate it for what it is now that I've used it. Any Canadian consumer staples on your watch list? Not really. I watch people talk about things like Couche-Tard. the company that owns most of the convenience stores and gas stations that are trying to get into the MJ market. I know PPC Ian's a big fan of that one, but I have a hard time, guys. Canadian market for the first time is outperforming the US market. I think, don't quote me on that. Canadian market has come back with a vengeance, but usually the Canadian market underperforms the US because we're just not technically inclined. Unfortunately, the US market is where you have all the big tech companies that have driven the entire world industry. China's catching up to that now with Tencent. Is it Tencent or is it JD? I think it's Tencent is the top third best dividend stock of all time, next to Apple and Microsoft, because Tencent has blown up. When you look at total returns, if you're talking about dividend stocks, it's the U.S. and China that's crushing right now. Unfortunately, not unfortunately, but if you're in Canada and you're looking for Canadian stocks and you want growth and good vectors behind it, it sucks because Canada only has things like Shopify, and Shopify is already so overvalued that I can't buy it. I use Shopify religiously. I see that it's the future. I get it. But if I'm gonna overpay for something, I'd rather overpay for something like Tesla that has a better moat. I don't think Shopify is the best moat. They're competing with Square. There's so many website builders. I use WordPress a lot. I use all of them for different reasons. Shopify, I think, has a better payment gateway setup, but WordPress is so much better for blogs, monetization of like Google AdSense and things of that nature. I'm staying away from Chinese stocks, Kyle. I wouldn't stay away from them because it's becoming quite apparent that China may very potentially become the dominating currency. They have a business plan, and you should, if you want to be really impressed. I know communism is annoying. I know right now that every major CEO, JD.com, Alibaba, all the major CEOs have stepped down from their titles. I think there's something going on right now that is utterly terrifying. To be a rich person running some of these companies in China. However, if you look at China's plan moving forward and what they want to do in the next 10, 20, 30 years, it's fascinating. They have a real potential to become the world reserve currency, and they're the look at. Let me just put this in perspective, okay? China is where the U.S. is about to be. What do I mean by this? Well, when you look at something like Amazon, you'd say, "Oh, it's one of the biggest companies in the world. It's one of the biggest, best companies in the world." By what metrics, however? Well, by valuation metrics. Okay, well, let's take a look at some different metrics. Let's talk about how much volume of product does Amazon ship? Well, actually, their volume of product and inventory is actually half as much as Baba. So if Baba's worth half as like way less than Amazon, but they're doing twice the inventory shipments, and a lot of people are just buying things on Baba and then reselling them on Amazon. How do you value that? I mean, I feel like people don't understand that the Chinese companies have gotten so big that they're bigger than the US companies by an order of magnitude by at least two. And people don't appreciate that enough. And it's funny just because the way the yuan is valued, it doesn't give it the same validity as it does these US companies. So I feel like once Amazon gets to the level of something like a Baba, that's when you're going to see government intervention. So what you're seeing going on in China right now is inevitably going to happen in the US, and we're just starting to see it now. Facebook, Apple, they're all constantly doing these congressional hearings. I mean, Tim Cook was just sitting at the congressional hearing for basically if they're a monopoly of the app store because they charge 30% for you to sell your app on the app store. They take a 30% fee on every transaction. So it's China. Like I said, it's I have a love hate relationship with it because the value, if they traded like U.S. stocks in valuation, they would be worth 2 or 3 times more easily, easily. So it's just like it's one of those things where I'm on the edge of buying more. I mean, I hold some Chinese companies for my mom. I think it's a valid thing to have in your portfolio in case China's the guys. We live in a bubble, okay? I'm sorry to say it, but we're incredibly ignorant on the Western side of the world. We live in a bubble. Most people in the US have never done one foreign currency exchange in their life. If you live in Canada, you probably used to foreign currency. You probably travel a lot more. Canada is an incredibly diverse nation, but I talk to a lot of people in the US, and I'm sorry to say it, but you guys live in a bubble. You think the whole world revolves around you because unfortunately the US media is the dominating media, right? Like I mean, when you look at movies, the US dominates entertainment. So the US entertainment is seen around the world and everybody looks up to that because everyone idolizes our entertainment. And it kind of brainwashes the world to think like, the US is a wonderful place. So is Canada. Don't get me wrong. I just think people don't understand what goes on in the largest populated places on the planet. by crazy huge amounts. And I would rather know what China's doing when they control most of the world based on shipping and so many things than just pretending like, oh, I don't need to buy these companies. Why would I want to buy China companies? Why would I want to buy Indian companies? Forget those places. They're not as good as the US, when you're really missing a really, really big picture of what those companies are truly doing. Again, double the order of magnitude by anything that's going on in the US. It's incredible. But again, communism, shit that goes on there. But I always try and remind people that if zone in a little bit and realize that the people in China are just like the people in the US. They want to have a good life, they want to feed their families, they want to be healthy. They're the same people you are. Okay. So it's just like when you can get past just what you see in headlines, yeah, I think you just start to recognize that the world is much more connected than just borders. Because I have friends in China. I talk to a lot of people there, and they always joke about they do the same things we do. They use VPNs. Facebook's illegal there. They got a VPN for that. I mean, it's not like it's that much different. It really isn't. It's just communism is just an interesting ordeal in and of itself, which I'm not the biggest fan of, but I am a big fan of China. I like China. I like the people there. I don't agree with communism that much, but that doesn't mean I'm going to hate the people that live there, that grew up there, and it's their lives. I mean, I'm going to recognize the companies for what they're doing. I'm not going to put a veil over it and be ignorant to it just because I don't like communism. This is coming from a fellow Canadian law. Chinese companies don't deserve the same valuations as U.S. companies. Not going to apologize for American exceptionalism. Yeah, I mean, the American companies have done a great job. But again, how do you value Amazon? Tell me how you value Amazon, and then go look at Baba and tell me what company you think is a better buy right now. Again, they're huge in comparison, guys. You think Amazon is big? Go look at Baba. Go up and down Baba's business model, and then come back to me and tell me what company you think deserves a better valuation or a higher valuation. And 9 times out of 10, it's Baba. You know, JD.com is already involved in, like, these companies are involved in aerospace, everything, guys. I mean, China's advancing electric vehicles faster than the US is. It's kind of funny that everyone, Tesla's an idolized company, and so many people hate Tesla, and they think that all these other US automakers are winning the electric vehicle game somehow. And it's laughable. China's winning the electric vehicle game. And I keep saying this, there's only two people that are going to be winning this. It's going to be China and Tesla. That's it. China's already 10 years ahead of most US manufacturing on electric vehicles, and they have most of the mines. They have most of the world resources. They control the world resources. Like, it's so dumb to be ignorant to China, guys. I mean, they're a huge ecosystem to the entire financial landscape. And I mean, look at Africa. You want to talk about a place to invest right now? Africa. Africa is coming up in a way that is so underappreciated by GDP growth. Africa is the fastest growing nation right now by GDP. And that's highly underlooked because so many people just, oh, Africa is not the best place. I've seen it on the news, and they're like, but it's like, hey, if you want to start a business, start it in Africa. Costs nothing, and you're going to have probably one of the best growth rates on the planet just because of GDP growth. It's incredible stuff, for sure. Like I said, I don't mean to get heated about this conversation. I just can't stand talking to people in the Western world because they just put this veil over it, and it's just all they want to talk about is the bad, the bad, the bad, the bad. It's all bad. It's all evil. In comparison, it's a terrible place. It's like, yeah, but they're people. They're just people. What's the difference? I mean, seriously, yeah, it's a different world, but they're still people that are just trying to do their thing. Wanted to say thank you for introducing me to MindMed earlier on. I did not follow into Northland Power. My mistake. Yeah, it is what it is. If you were to invest in Northland Power for the first time, I wouldn't buy it here. I would rather buy something like an Algonquin Power. Um, MindMed is, I don't need to go down the whole MindMed talk in the psychedelic sector right now, but because it's just so wonky. But when you're talking about the renewable sector, I wouldn't buy Northland Power because it trades at way too high of a multiple. Northland Power in the renewable sector, I see, this is the problem I have with it because I own so much of it that I want to sell it down, but I got it at such a good price, and I have over like a 5% dividend yield on it. I was buying it for like 15 to 16 bucks a share. I was capping in 5 to 6% yields on that thing like 4 years ago, and now it's trading at like a 20 multiple, which is just crazy in my opinion. Whereas you can go look at something like a Hydro One that trades at like a multiple, like a 10 multiple, and is growing fabulously. You could also go look at things like Algonquin Power. I love Algonquin. They're doing a shift. Look at Southern Company. I think it trades at the same multiple, but as Northland, but it's much bigger. It's way more diversified. I really like Algonquin though because they're doing the transition into renewables. The PE ratio is way more reasonable. They actually are growing the dividend. Northland Power is not growing the dividend. Northland Power is just a pure renewable play that I just think right now is probably not the best time to buy it per se. I mean, it's going to do well. I mean, the entire renewable space is just blowing up thanks to government intervention. But I would stick to ones that trade at better multiples right now that are going to compound better. Because why would you buy Northland Power at a 2 or 3% yield that'll never compound? We never know when they're increasing it. They've only done one increase since I've owned it for the last 6 years. But Algonquin's done it every year, and their payout ratio is like 40%. It's great. Recently started to position Algonquin. Yeah, exactly, Shamir. There looks like a good entry price right now. Yeah, that's what I'm saying. I've been buying it aggressively. I bought half my position. I'll probably buy a little bit more either this week or next week, depending on how I feel about it, because they just did a massive share dilution, which again, something that you could argue is a good or bad thing because they're investing. They diluted about $800 million that they're putting into the renewable sector, obviously, which is good because they're not raising debt. And if you're not raising debt, that's great. Short term, though, the dilution makes it harder for the stock to rally. But if you're buying it for a dividend yield, who cares if the stock rallies? Because I don't plan on selling it for the next 50 years. So if that's the case, then yeah, you're getting a great deal on it. But a lot of the Canadian conglomerates do that all the time. TELUS Communications just did a massive share dilution to invest into 5G. Actually, I want to talk about a great company, TELUS. TELUS is better than AT&T. It's better than most of the telecom companies. It's much smaller. It's got a lot more room to grow. It's got a runway on the Canadian economy that's going to be introducing another 1.8 million immigrants over the next 3 years. And then on top of that, we're one of the fastest first world growing nations population-wise. And telecom and infrastructure does incredible. That's why another reason I like Canadian infrastructure companies like Hydro One. They're just these companies are going to take advantage of the real estate boom. They're going to take advantage of the energy boom. They're going to take advantage of just all of it. It's so great. I think the Canadian economy might outperform the U.S. market on some levels just because of that, because we're just growing faster. And it's only because we're a tiny country. I mean, growth comes from smaller places. Like if you start, that's like buying small caps. You want to have a few small caps in your portfolio because you're not going to get Apple isn't going to double again. I mean, it's not going to double overnight. Like MyMed freaking quadrupled overnight. I mean, that'll never happen with an Apple, right? But TELUS is my portfolio as well. I just feel like they have most upside of the three telecoms. Yeah, I agree. I think they have more upside than the U.S. telecoms because, again, U.S. telecoms are way oversized. They're whales at this point. And then you look at the fact that they look at AT&T. Oh my God, like the company's been horribly managed. And then I look at TELUS, and the management's done a phenomenal job. They're in healthcare, telehealth for that matter, which is incredible. They're in security, huge business, blowing up massively with everybody moving into individual homes just trying to secure themselves. I know security is a big business. And then they obviously have telecom and 5G. Like they're poised for the future, and they're going to take advantage of the population growth. So I'm on board. I don't think Starlink will disrupt them to any major degree because they're most of their businesses in the cities. Because Starlink seems like a disrupting technology, and it's going to brutalize a lot of internet companies. I hate my internet company. I'm gonna give them the middle finger on the way out the door. I've never hated. I wanted to sue them. I honestly wanted to band together and sue the rural internet companies because they lie through their teeth. They sell you something they can never deliver, and now they're trying to catch up because they know Starlink is coming, and I can't wait to the day to get Starlink and call them and be like, "Hey guys, I'm canceling my service. Basically, go f yourself." Because I call every. So this is what I do. Literally, this is how annoyed I am with the Wi-Fi companies because they've oversold the system. The system cannot handle the capacity. So at busy peak times like 5 to 10 o'clock, using the internet is brutal. So what I do is every 3 months I call them and I say, "Hey, I'm pissed," and they give me a discount. They knock my bill down by 30%. I have done that now for the last 2 quarters. For the last 6 months, every quarter I call them and I get pissed. They give me a discount. So I've been paying instead of $90 a month, $60 a month, and I'm going to do that until I get Starlink because I hate them and I want to sue them because they lie. I don't know how they can do it legally. I really don't. I honestly told them I would pay them more money. I would gladly pay $200 a month for stable internet. And it's so dumb that they don't realize that if they're just dumb. I'm sorry. I just don't even want to get into those business models. I hope they burn in the ground. I really do. Management's stupid. Have you seen a VSBY? It's a small cap tech AI company transforming retail, allowing you to monetize customers, capturing real time data with cameras for security advertising. Yeah, it's probably it could be an interesting business model for sure. The Internet of Things is my favorite word right now. If you guys scroll around on any company that's up and coming, you're going to see one word come up a lot. It's called IoT. I've never seen a word more than I've seen it in the last several months is that word, Internet of Things. Internet of Things is getting integrated into every aspect of our lives, from the way you pick up food to the way you're going to ship goods, because people want to track that stuff. So they're integrating internet technology into everything. I mean, your lights at home, like everything is becoming self-sufficient and learning about the times you turn your AC up and down. When do you just do everything? And it's just going to keep learning that, right? Um, like I said, people don't appreciate how fast AI is going to take over. What else we got? KAO Corporation is so cheap. What do you think? I'm going to have to take a look into that. I don't know that company off the top of my. I could look it up real quick. Actually, maybe we'll do a quick. We've been going for about 49 minutes. We'll do a few more questions and answers, guys, and then I'm going to kick it off. We're at 2:00 here, but KAO Corporation. I've never heard of it. Let me take a look. Good sir. KAO stock. Yeah, I love when you guys throw me companies, because everybody asks me about what companies I like, and it's always the same boring stuff. I'd rather see what you guys are interested in. This looks like a Tokyo company, trades for 3.2 trillion, the Japanese currency there, at 2% dividend yield. Let's just take a look at the 5-year real quick. It's been pulling back. It's trading down about 25%. PE ratio seems fairly reasonable against the market at a 25. Let's just see what Yahoo has to say about it real quick. Yahoo's not accurate, by the way. I've noticed this a lot recently, and it's kind of driving me bonkers that when I cross-reference Yahoo's data against balance sheet data, it's been inaccurate more than I would like to admit. And I use Yahoo far too much, and I'm way too reliant on it, and it kind of frustrates me that it's been inaccurate. But the growth rate's incredible. So in 2019, they did 1.5, what is that, trillion? Holy crap, trillion. Yeah, and I don't know what the conversion on that is. Actually, they saw a little bit of a decline in 2020, but they're expected to grow or flatline. I don't know. I have to look into this company and what they do. Their books have been flatlining, and I'm curious to why that would be. Balance sheet, however, is pretty robust, insanely robust. I mean, they got great debt to asset ratio, so I don't know. But yeah, any last comments and questions here? The huge thing is they had more growth Q1 2021 than overall 2020. Already have contracts with Microsoft and Intel, huge small companies. See, that's the thing. You guys, it's so dumb for me to just throw numbers at you, because like you have to know what the company's doing. It's like looking at Tesla's balance sheet and just saying, "Oh my God, they only have 30 billion in revenue." It's like, yeah, but they've got hundreds of billions in reservation orders that still have to come into fruition. So it's just like, if you don't know the company, it's ignorant to just look at the books and be like, oh, I know what I'm talking about, because like you actually have to listen to the conference calls, guys. Like you actually have to know the contracts, the deals, where they're moving toward and what they're doing, or you're just going to miss way too much. Great example, GEO Group. GEO Group is my favorite example of, it doesn't matter how good the balance sheet is. Sometimes that doesn't matter. I got destroyed on that company. It's the most undervalued REIT in the entire market, and it's stupid. I know the Big Short, Michael Burry bought into that because he thought it was going to short squeeze because it has super high short interest. But I don't play the short game, guys. I don't want to. I don't want to gamble on that shit. Do you have any new penny stocks? No, I. So this is the problem with MindMed, that because I made a lot of people an insane amount of money and they think I'm some god or something, which I'm by no means. I'm not a genius stock picker, folks. I just sometimes things work out, and I didn't think MindMed was going to do anything for 3 to 5 years, and it worked out in the first year. And the problem with MindMed is I don't care that it's a penny stock, and that's what people don't understand. Is like, to me, it doesn't matter if it's a penny stock, if it's $100 billion corporation. It's just, if I find a business that I like, I don't care about the stock. It could be a SPAC, it could be anything. It's just, if I come across a business I like, I don't care what it is, so long as the valuation isn't kind of crazy absurd, like with the Shopify, because Shopify is an incredible business. I just don't want to pay a crazy huge multiple that I have to sit on my hands for 5 years before it actually makes sense to own it, preferably. And if I'm going to make that bet, it's going to be on really specific companies. But I can't tell you the next MindMed, man. I don't know. I really don't. I just try and pick good businesses, and right now, MindMed is not a good business to own. It was back then; it is not now. If you're owning MindMed for the short term and you're going to play this is what I say about MindMed. The only reason I bought MindMed was based on one thesis, and one thesis alone. That is, we know that these drugs work with a high degree of certainty. And the fact that we know that these drugs work and they're in the middle of phase trials, you'll never say that about another drug company you'll ever come across again, ever. Find me one drug company where you know with a high degree of certainty, based on the use cases of people that have already been kind of self-medicating with the stuff, that you know what the phase trials are going to be. You want to get rich? Predict phase trial outcomes. You'll become a multi-billionaire, and you can still do that with MindMed. However, MindMed has priced a lot of that in. And I still think in the short term, once we get through phase 2B trials, my med's going to bump up again. And I think we're going to see the stock rally maybe to 2 or 3 billion. But the problem is it's priced all of that in. My med has priced in, though, that these drugs are going to work. And that's what scares the crap out of me. And it scares the crap out of me. The CEO just stepped down for God knows what reasons. It seems like he was almost forced out of his position. I don't know why. But these drug companies, guys, you don't want to own them when they're worth billions of dollars and they have no revenue, because nobody knows the outcomes. It takes decades, guys, decades. I mean, the fact that Pfizer and these companies, Moderna, got these vaccines out, the rate that they did is crazy. That's never happened. That is a marvel that is underappreciated in the drug world, that they were able to fast track 40,000 people trials and get something that the FDA could approve. Because a lot of people say, oh, there's no science behind these things. These aren't new ideas. Doing mRNA dubbing, and just like, guys, this isn't new stuff. They've been doing this stuff for years. It's just a matter of, it usually takes several years to get these drugs through every phase trial. But the FDA fast tracked the phase trials by saying, hey, we can't let this take 3 to 5 years. This needs to happen now. So we need to get as many people that are sick as possible. We need as many control groups as possible now. And we need to do phase 1, phase 2, and phase B in the next year. And that's what they did. It's not like this isn't based on science. It's not like they just came up with this crap and it's an experiment on the global economy. I mean, I don't know. I don't want to get down to the anti-vax conversation. I got my shot. I can't wait to get the next one. I went through a crazy spout of stress, depression. I wouldn't say depression, but it messed my life up, guys. I give me a vaccine whenever I can get it. I mean, I don't know about you, but I lost my entire career. I mean, I had to do a 180 pivotal shift, watching my income go to nothing. And thank God, as blessed as I am and my family is, things worked out pretty good. But unfortunately, it has resided in other physical issues, because I don't know if it was stress related. I don't know what it is. I just have issues that I've never had before, and I have to go to the doctor now to deal with it. And I can only presume it's related to stress, because I think I deal with my stress pretty well. But when you've locked yourself in a closet for an entire year, 6 days a week, and you've done nothing but work for a whole year, it doesn't come as a shock to me that I'm experiencing problems physically. So I'm like, I'm trying to wind back now, get my shots, go out, spend time with family, friends, enjoy life again. Because I literally locked myself in a closet for like a whole year. And yeah, it's incredible. I think what I did, I think it's a marvel. I can't get over it myself, but it comes with health issues, unfortunately. So I don't like anti-vaxxers. As soon as that conversation comes up, I just don't even waste my time. I don't have time for that shit, guys. Just leave me alone. I don't want to hear about it. I don't want to hear about it. Clearly, your life wasn't that infected by the virus. You don't care. So whatever. Stay away from smaller companies. MyMed, the change, their CEOs, never good foreshadowing. Unfortunately, I really enjoy companies that have original founders as well. I know somebody threw Fortis in here. Fortis is a good utility as well. MYMD, I have to look into, guys. I have a lot of exposure to small caps, but it's fun looking into new companies. I would be careful with a lot of exposure to small caps. They are not the path of least resistance to wealth. And maybe I'll finish on a quick note here. Late to the party, but what's your take on SPACs? SPACs were at a really cheap valuation. They were a really good buy, especially with things like IPOE, SoFi. I think that's going to be a really incredible company if you can pick it up at the right price. Unfortunately, SPACs just went through a cataclysmic problem with the SEC, which came into play with regulations around warrants. Because with warrants, they were claiming them as assets, and unfortunately, warrants they're very. If you don't know what a warrant is, it's basically based off future speculative price. And what those prices are going to be in the stock down the road. And these companies were marking them down as assets when they should have been marking them down as liabilities. And that is, I mean, you're seeing way less SPACs come to market than ever before because of SEC regulation. And I mean, that's what happens. Anytime there's big money being made in a new sector of the market and everybody, their grandmother's piling into it. I mean, we even saw people, the likes of the basketball player guy that was doing, I mean, celebrities were starting SPACs because it was as a capital raising game. I mean, it's the best business in the world. Give me all your money. We're going to park it in a bank account. You like who I am, don't you? You guys like me. Put some money in the account. Let me go find a business. I want to buy a business. And if I don't, guess what? You get most of your money back anyways, minus the warrants, which I think is like 0.5% or something. Like, it's freaking hilarious. It's such a good business model because like the managers get rich, like super rich. Every time they close a deal on SPACs, you want to talk about quick money, baby. I do, however, think SPACs come into the market overvalued. So you want to make sure you're buying companies that are really well poised for growth, because people don't realize that SPACs operate off almost an auction-based mechanism. So you end up going to a bank, you have all this money, you tell the bank, hey, I need to buy a company. What companies are trying to sell right now? And they're going to compile a list of all the companies that you can bid on and you could try and buy. And unfortunately, you're not the only company competing for those bids. So whoever wins owns the company, but they're usually paying the highest market premium for that company. So you need to make sure that you're buying the company for that has good growth, because you are going to overpay for it the second you buy a SPAC. It's just the way that market operates. Good luck and hope everything is good with you physically. It's not like it's a bad thing. I mean, I couldn't figure out what it was because I was having chest pains, and I still don't 100% know what it is, but I think I don't need to go down this path. I don't like talking about health. It's not your problem. I don't like. It's just a vibe killer all around. I don't care about that stuff. I care about it for me personally, but I don't care about telling you my problems. I'm not one of those people. I keep my drama to myself. But I do appreciate it. Thank you, sir. And yeah, this isn't my second job. This is my first job now. My main job's in the toilet. Do you think it'd be okay to be 100% weighted in growth for the next first 2 years? I'm 27 years old. And okay, how do you define growth? That's the question. How do you define growth? Do you think it's spec stocks like penny stocks? That to me is crazy. I wouldn't buy. I don't like owning penny stocks that much. There's some really good ones. If you want to balance a portfolio out, it's great. I noticed somebody in here said that they're highly leveraged in growth stocks and in speculations. But for me personally, I would take the path of least resistance to wealth. And this is something that people just don't want to admit to because they want to gamble. They want to be perked up all the time. You know what they say about investing? If you're excited about your investments, they're probably not the best investments to be in. Exciting investments to the market, your AMCs, your GMEs of the world. It doesn't take a genius to look at that balance sheet and realize what a terrible company it would be to buy for a long-term investment. I mean, it's not rocket science. So I talk about the path of least resistance to wealth, and I try and reiterate it as much as possible because you know what the future is going to be, guys. You're not dumb. I mean, you use these companies every day. I mean, do I really have to reiterate to you Amazon, Google, Facebook? Did you see Google's growth rate in the last year? I mean, if I was going to bet my entire life on companies, why would I bet it on a company that trades for $100 million, that hasn't been in the market for more than a few years, that has no proven growth or business model, when I can just buy Google and get a 50% growth rate? You look at how much Google's up this year, guys. It's $1 trillion company, for Christ's sakes. Like, why make investing harder than it has to be when you know where easy money is? And even if you only have 10 grand, so you put 10 grand in Facebook, Microsoft, and Apple, there's your entire growth portfolio, and you're probably going to outperform the market. It's only at scale. It's a tough decision. I mean, because I can only talk from my personal perspective. I can't tell you what to do. I'm not a financial advisor, and I'm in a much different position than you are. I don't know if you have kids. I don't know if you have family. I don't know what your risk is. Are you living at home with your parents? Can you afford to take on more leverage risk? I mean, there's so many factors that come into making those decisions that I can't 100% tell you what's going to be the right decision for you. I just always come back to the point of, in my head, if I get cocky, if I get arrogant because I just picked a mind med and mind med made me 40 or 50 grand, and I'm like, oh man, I got to find the next mind med. I hate that pattern of thought. The pattern of thought is extremely destructive, and I see it a lot right now. And unfortunately, I see it with a lot of big YouTubers. I'm not going to name any names, but I've seen a lot of big YouTubers that are getting into venture capital all of a sudden because it's a blowing up industry, and it's really easy for them to raise capital, and they get paid out in shares, and they're like, "Oh, I can buy the future," because they bought things like Tesla. They bought some of these companies that made them a fortune, and somehow they think they can just replicate that again and again and again. And it's such an ignorant thought pattern, in my opinion, because I just don't think people realize how truly hard it is. When the markets do nothing but go up, and you think because you bought a MindMed or you bought a Tesla, you're the smartest guy on the planet. I'm sorry, every speculation went up. Every SPAC went to the moon. Almost every small cap blew up. Every venture capital company was raising money like it was candy. You're not a genius. You could have threw a dartboard and just it picked a winner, but now the market's shifting. It's not going to be as easy. And I just always try and reiterate, yeah, sometimes you get lucky and you can pick these stocks at the right time in the market, and it does exceptionally well for many factors that maybe come down to some of your intelligence, some of it to market conditions, and a combination of a good whirlwind of stuff, and it works out. However, that's not going to work all the time. And you think you can do it again, and you make a bigger bet, and then you lose half that money or more, and you hate your life again. And you're like, well, I guess I wasn't that smart. So when you make, this is why I always show my performance. I always show you guys the performance of my portfolio because I outperform the market consistently. And the only reason that I can claim that I think I'm good at doing it is because I know when to stop. I just know when to put the brakes on, and it's done me very, very well. And I notice other people that get into the market are doing very, like, that have bigger portfolios. When you look at the performance, it's like this. It's insane. And that's because I always scale my portfolio to balance it all the time. If Tesla becomes a 40K position, I scale it down immediately. If MindMed goes to a 20% position in my portfolio, I scale it down. I don't hold on to it because it's crazy. It's just, you're gambling, right? Like, you have to understand when you're gambling aggressively. And I notice when people get big capital gains in the market, that they get cocky all of a sudden. They just think they can hold on to that, and it's not gambling. Like, if you own a $10,000 position, it's 5% of your portfolio, and it goes up 500%. You now have 50 grand, and you're like, I'm going to hold on to this, all of it. And it's like, now all of a sudden it's 20-25% of your portfolio. You have to understand, if you wouldn't buy the stock at this valuation, it's the same thing as holding it at this valuation, right? So you got to be careful with what you're doing. And you have to understand how to mitigate that stuff, because that's where people screw up all the time. I see it all the time. They get greedy. They keep doing what they're doing. They think they can replicate it. Like, it's easy. Like, finding a Tesla is easy or something, and it's not. So take the path of least resistance. You'll do well. You know what the path of least resistance is. Subconsciously, everybody knows. If you're brand new to the market, you might not. But if you've been in the market for at least a year, you know what the path of least resistance is. Index funds, tech stocks, big tech stocks, name brand tech. Like, it's not rocket science. It's just not. And that's why I outperform, because I take my spec plays, I mitigate them, and I reposition that capital into the path of least resistance to wealth. I had the chest pain thing around 6 months ago, and it's sketchy. Just stop trying to overanalyze things, especially what outlook controlled. Drinking more water, less sugar. I agree. I've dialed back on speculative and scaled more comfortable positions. Yeah, I honestly think. I don't know. I don't like having this conversation. I really hate talking about health. But if it helps you out at all, I think I'm having stress induced anxiety. I used to have anxiety attacks when I was a lot younger, and I didn't realize that that's what I might be having now. Um, because I deal with it mentally in a different way. Like, I don't freak out. I feel fine. It's just that I don't think I deal with stress very well, and I compartmentalize it and push it to the side and just let it build up. And I don't explode. I don't, like, freak on people, or like, it's weird how I deal with it. And I think it's coming out into chest pains and other problems, because I've already gotten EKGs done. I got to go in for x-rays still, and a few other things, but I pretty much narrowed it down that I think I'm having stress induced anxiety pain. So that's why I'm dialing back. I'm just trying to relax, take it easier. And it seems, because again, I'm a workaholic. I work like 12 hours a day. That probably doesn't help, but I enjoy it. It's so bad when you enjoy the worst habits that, like, I enjoy working all the time. Here I am streaming on my girlfriend's birthday. Probably not too happy about that. It's like, literally, I work all the time. Any opinion on AMD? AMD, the chip makers are great. They're kind of overvalued, but they're still worth buying if you're into things like Nvidia. If you can catch them on dips. I mean, that, oh my God, the chip market. I wish I got into that one, but I'm too ignorant. I agree with dialed back. Yeah, on speculations. Merger's complete. I took an initial MindMed investment out and dumped it into AMD. Yeah, that's. I still think MindMed has its play. It's just a matter of long term. I don't trust it. Short term, I trust it, because I think we're going to get great phase trial outcomes. I love working overtime, and it's caused problems with stress as well. Yeah, I don't know what it is. I don't know what it is, because I like working all the time, but, like, the pandemic was so overwhelming, because, like, I couldn't see my family, I couldn't see, like, people I loved, I couldn't hang out with my friends. I was constantly hit with brick walls everywhere I went, so I locked myself in a closet. I lost my entire 10-year career, and I made this pivotal shift, and the pivotal shift worked. But there was always that speculation that if this doesn't work, I have to recognize when it's not working and then do something different, or go look for a job, or start doing Uber. And, like, when I was at a stage in my life where I was, like, ready to move out of my parents' house, and I was comfortable, and I was making a decent income, 40 grand a year off something I loved, being a full-time magician, working in the entertainment industry with my buddy that runs a DJ company. Things were good, right? Like, it was good. I had fun. It was a great life. But then, like, when you get hit with a brick wall and your income goes to zero almost, and, like, it's stress inducing, but I didn't I feel like it didn't bother me, but it must have. Like I feel fine. Did you guys hear me complain at all? I've been making videos through all of this. I documented all of it. I think I was fine. I enjoyed the journey. I still enjoy the journey, but I guess just sometimes your brain and your body can't keep up. It's kind of funny, really. Um, I understand this the term working yourself to death. I think but I got healthy, man. I've been working out. I've been doing lots of stuff. I've been doing everything I can to get my health better. And even though I worked out for 3 months, almost every day straight, I still get chest pain, which again is sketchy because it's not comfortable, and I'd like to think it's imaginated and it's anxiety based, and I'm like, oh, I'm just picturing I'm having chest pain, but it's debilitating when I get it. Like it stops me from doing everything because it hurts so bad. And then I literally like have this moment where I'm like, shit, I need to go to the doctors. I'm like, if I die from this, I always joke about it because I'm like, if I die from this, I'm going to be so like, it's just going to be funny. It would just be hilarious. Uh, Again, we got to stop the stream. I'm getting too morbid. My morbid thinking about death is terrible. Glad you're tackling the problem instead of ignoring it. I ignored it for too long because I started getting chest pains back in December, really bad. Like I couldn't sleep. My chest hurt so bad, and I was really worried about it. And then I just started working out. I quit a lot of bad habits. Just really started to work on my health, and I've been doing that for like 3 or 4 months. And then all of a sudden, I still have chest pain. Just it comes and goes. And I've realized that it comes more often when I'm caught up in a lot more stressful situations, and that's the only because my doctor was trying to narrow down like what exactly would be causing it. She's like, are you smoking? Is it like what happens when you get it? What are you doing? What are you eating? So I just started writing stuff down and just trying to figure out, and I pretty much narrowed it down that it has to be something stress induced. But yeah, sorry, I didn't want to go down that path too much. If you guys appreciate me being so open, consider hitting that like button. I would appreciate it for the 30 people that are floating around. But I am going to go spend some time and relax and enjoy this beautiful day up in the city of Toronto. Girlfriend's birthday today, so we're just going to go relax, spend some time with the family, and I'm glad that I made some time for you guys. So stay cool, stay awesome, and I look forward to catching you tomorrow. Peace.